Hey everyone, after years of anticipation, NSDL has finally launched its IPO today. It's actually a big IPO with an issue size of around 4,000 crore and it's a complete OFS. Now if you have been tracking the unlisted space, you'd probably know that NSDL has been one of the most popular and in-demand share, often traded at premium valuation. And with this IPO finally going live, there's a lot of excitement on the street. But there's one big question a lot of people are asking. How is NSDL compared to its rival CDSL? Now CDSL has been a market darling in last few years with around 15 times return since COVID lows. But NSDL is even older than CDSL. In fact, even larger than CDSL in terms of custody value. And now it is stepping into the public market. So in this video, we'll do a comparison of NSDL versus CDSL across business model, financial, user base, risk, and future growth. Then we'll have a quick look at NSDL IPO details and valuation. Finally, we'll conclude if NSDL deserves a place in your long-term portfolio or not. Alright, let's get started. Let's first start with the basics. So both NSDL and CDSL are depositories. Actually, these are the only two depositories in India. Now think of a depository as a digital vault where your stocks, bonds, ETFs and mutual fund units are held in electronic form. Just like a bank holds your money, a depository holds your securities safely. So you don't need physical share certificate anymore. So if you have a Demat account, your Demat account is linked to either CDSL or NSDL. Now here it's important to understand how these depositories actually make money. Both NSDL and CDSL have similar business model. They charge fees for holding and processing securities electronically. There are various revenue sources, like first is annual issuer charges, where companies whose shares are listed in Demat form pay an annual fee to the depository. This is the largest revenue source for both players. Then second source is transaction charges, where every time you buy, sell or transfer shares, the depository earns a small fee from your broker. This became a major revenue driver during 2020 to 22 bull run. Third is account maintenance charges. They actually earn a fixed amount per Demat account either directly or through depository participants, which is your broker. Apart from this, there are various other revenue sources like e-voting for shareholders, KYC services, pledge creation, holding of government securities, bonds, etc. In short, the more retail investors, listed companies and trading volume, the more revenue for both NSDL and CDSL. On the screen, you can see the revenue breakup comparison of NSDL versus CDSL. More or less, both have similar revenue breakup. Now let's look at the history and ownership because that tells a lot about how both companies were formed and who controls them. So NSDL was set up in 1996 as India's first depository right after SEBI allowed the dematerialization of shares. It was promoted by NSE, which is still the largest shareholder that hold around 24% stake. Other big names like HDFC, Citi and Canara Bank also hold stakes. Then CDSL on the other hand was launched in 1999, a few years later as a rival promoted by BSE, that is Bombay Stock Exchange. Today BSE owns around 15% of CDSL. Now as of today, CDSL has more than 15 crore Demat account, whereas NSDL has around 4 crore Demat account. So at first glance, it might look like CDSL is much bigger than NSDL, right? Actually not quite. If you look at the assets under custody, which is the total value of securities held, NSDL is far ahead. NSDL manages over 464 lakh crore worth of assets, while CDSL's AUC is around 70 to 75 lakh crore. So while CDSL wins in terms of number of Demat account, NSDL dominates in terms of value, and the reason is CDSL is focused on retail investors. Its total account numbers surged exponentially post-COVID thanks to the partnership with platforms like Zerodha, Grow, Upstock, etc. So these 15 crore Demat accounts at CDSL are mostly small ticket retail investors. Many of these accounts are inactive or hold limited securities in the range of 5,000 to 2 lakh rupees. On the other hand, NSDL has strong relationship with large institutions like mutual funds, custodians, FPIs, insurance companies, banks, and that's where most of the high value, high volume securities like promoter holding, institutional investors, sovereign bond are parked in NSDL Demat account. These accounts hold massive value even if the number of account is low. So if you compare the average wallet size, CDSL average wallet size is around 5 lakh rupee per account, whereas NSDL average wallet size is 1.18 crore rupees per account. Now let's compare the financials. If you look at the revenue and profit, NSDL has higher revenue in absolute terms as compared to CDSL. However, the growth in both companies are at par, with both growing at around 35% plus CAGR rate in last 5 years. Although in terms of net profit, CDSL is bigger than NSDL in both absolute terms as well as percentage growth. While NSDL net profit has grown at 22% CAGR rate in last 5 years, CDSL net profit growth is staggering 37.5%. Another interesting observation is that CDSL has shown more volatility during March 23 when market was under pressure. Its revenue was flat and net profit fell down by 11%, whereas NSDL has shown more resilience during that difficult period. In fact, recently in Q1 FY26 result, CDSL net profit fell down by 24% year on year. But overall, CDSL net profit growth is much higher than NSDL. And the reason is because CDSL has much better margin and return ratio as compared to NSDL. While CDSL operating margin is touching levels of 60%, NSDL margin is in the range of 20s. And CDSL return on capital employed is also much higher at 40% range. NSDL ROC is in 20s. Now let's understand the opportunity and risk for both companies before investing your money. So both CDSL and NSDL operate in a duopoly market, and the long-term opportunity is massive. India still has very low equity participation. As financial literacy improves and more investors come into the market, especially from tier 2 and 3 cities, CDSL with its retail-friendly tech and broker tie-ups stand to benefit the most. NSDL, on the other hand, is deeply entrenched in the institutional ecosystem. So as India grows and institutions deploy more capital across equity, debt and ETFs, NSDL becomes a key backbone of that infrastructure. But before taking a call on investment, you should understand the key risk. Both CDSL and NSDL earn a significant portion of their revenues from market-linked activities, especially transaction charges, demat account maintenance, IPO processing, and corporate action handling fees. So when equity market activity slows down due to poor sentiments, fewer IPOs or regulatory tightening, both players feel the heat. However, here's the subtle difference and why CDSL is more exposed. Since CDSL revenue is more retail driven, CDSL benefits immensely during bull run. When lakhs of new accounts are opened, small investors rush into IPOs and trading volume shoot up. But in bearish phases, these same users often go dormant, directly impacting CDSL's earning. On the other hand, NSDL base is more institutional. They may be fewer in number, but they are more stable and they often continue operating even in weak markets due to passive investing, bond custodianship, ETF flows, etc. This is clearly visible from revenue and net profit, where 2023 market drawdown resulted in degrowth in CDSL net profits, whereas NSDL still managed to grow its profit. So NSDL has some insulation from market volatility, though it is also not fully immune to it. I hope you understand this risk. And for both, there is always regulatory uncertainty. SEBI keeps pushing for fee reduction, tighter compliance and so on. Now let's look at NSDL IPO details and compare the valuations. So NSDL IPO window is between 30th July to 1st August. IPO price band is between 760 rupee to 800. Face value is 2 rupee. One lot is of 18 share. IPO size is 4011 crore. Please note that it is a complete OFS, that is offer for sale, where promoters and early investors are exiting or reducing stake from the company. Now we have discussed it earlier also that not every OFS is bad. Many fundamentally strong companies go for OFS because they just want to list themselves in the Indian market and they don't need to raise capital due to their strong financials. NSDL is one of those companies. So don't take this OFS negatively. Yes, valuations and timing of IPO is always debatable. So if you look at the valuation at an upper price band of 800 rupee, NSDL is launching the IPO at a PE of 46. Now how do you decide if the valuations are fair, overvalued or undervalued? So there are two ways. First option is to check the valuation of its peer, that is CDSL, that currently command a PE of 64. So comparatively the valuation of NSDL are at much better levels. But then you should also look at the earning growth. CDSL earnings have compounded at 37% in last 5 years thanks to the bull rally post-COVID. Whereas NSDL earnings have compounded at 22% CAGR rate. Obviously with high earning growth, CDSL will command a premium as compared to NSDL. Also the return ratio of CDSL are much better than NSDL. However, another important aspect is NSDL is less volatile as compared to CDSL. So during market drawdown, CDSL can be more volatile. That's where NSDL should get a brownie point on valuation. Plus, we know that the equity market in India still has a long journey ahead, and NSDL has the potential to compound its earning at 20% rate. Now, for the company that is fundamentally strong, part of duopoly market, growing at 20% CAGR rate, and can potentially continue this growth, it will command a premium. But the question is, how much premium is enough? So at the current PE of 46, the PEG ratio is more than 2. That's certainly not cheap. I usually like to buy companies with PEG ratio of 1.5 or below. So for me, this IPO of NSDL is fully priced. I don't see much scope for valuation re-rating. I know that in Indian market today, when many strong companies are trading at a PE of 50, 60 plus, NSDL IPO at PE of 46 may appear relatively cheaper. But the fact is that Indian market is very expensive at the moment as compared to the past valuation as well as other countries, especially in case of growth companies. Yes, there is growth potential, macros are strong, but valuations are on higher side, especially for high growth companies due to massive liquidity in the stock market. Thanks to the SIP culture, where every month people are pouring 26,000 crore plus of money via SIP. And fund managers have to deploy that money even if the valuations are high. So with this liquidity, I'm sure institutional investors would like to buy NSDL and there will be a good craze for the company. Hence, from here, NSDL can still do well, but that would make the valuation even more higher. I was looking at companies' grey market premium where NSDL command currently around 15% type of premium. So if it gets listed at 900-950 level, PE would inch to 53-54. I don't think it would leave any scope to buy at those levels after the IPO. So apply for the IPO, but if you don't get the allotment, it would be better to wait for better entry levels. So to wrap it up, NSDL is a fundamentally strong business, part of rare duopoly, business deeply entrenched in India's financial infrastructure, and now finally stepping into the public market after years of anticipation. Yes, the IPO is fully priced, and no, it's not screaming cheap. But it's a high quality, cash generating business with strong institutional backing, long growth runway, and a relatively stable earning profile. If you're someone looking for long-term compounders with predictable cash flow and limited competition, NSDL definitely deserves a place on your watch list. But should you chase it post-listing at 900-950 level? Probably not. Let it list, let the dust settle, let the valuation cool off a bit. Great businesses don't need to be bought on day one, but at the right price. So be patient, be selective, and as always, focus on quality, not FOMO. That's it for today's video. Hope you find it useful. If yes, don't forget to hit like, share it with your friends, and subscribe for more deep dive analysis on IPOs and market insight. See you in the next one.